What's going on, everybody? This is a channel that you need to subscribe if you would like to stay updated with cryptocurrency information and news. You are here to make money with cryptocurrency, and we fill you in with the best and the most unadulterated information on the cryptocurrency market. So make sure you go smash that subscribe button right now. And with that being said, let's hop into the altcoin news. Altcoin roundup. Stablecoin pools could be the next frontier for DeFi. The days of 4,000 APY, APR on DeFi liquidity pools could soon be replaced by safer, lower yielding stablecoin denominated pools. What does that mean? So when you go to Pancake or when you go to Polycat, all these websites, there's really high returns, right? There are some risks associated with that, and the yields that you get are in their native tokens. So even on ApeSwap, you're going to get banana. You get PancakeSwap, you get cake. So stablecoins are the newest trend to emerge in the decentralized finance arena due to the resiliency they bring to the sector, especially since protocols that are more reliant on the dollar-pegged assets continue to offer token holders low-risk yield opportunities in turbulent market conditions. But in saying that, we're moving kind of sideways. So I kind of see there is some safety around just taking a little bit of a risk. But obviously, each of you have a different risk profile associated with that. But this is going to absolutely change the world. Listen to this. Stablecoin market cap increases tenfold. The total amount of stablecoins available in the market has skyrocketed from under 15 billion to more than 113 billion over the past year, led by Tether USDC, bringing an increased level of liquidity to DeFi pools because people like to convert from USDC, USDT to the cryptocurrency that they decide to convert into. The top stablecoins are including the large percentage of the liquidity pool pairs available on DeFi platforms, which is basically what provides a liquidity to be able to purchase a particular coin using USDT or USDC. So on Cake, it'll be using USDT to buy Cake on PancakeSwap. So stablecoins have in fact led the creation of stabilized subset of DeFi protocols, which focus on yield farming stablecoins and provide a safer way for investors to earn a yield while minimizing risk. And now this is very significant, guys. Only owning the DeFi craze, protocols attracted new users and deposits of liquidity pools and things like that by offering high yields that were typically paid out in their native token of the protocol. So like I said, Pancake with Cake, Uniswap with Uniswap, ApeSwap with banana, Sushi with Sushi. But with the majority of DeFi tokens now down at least 75% from their all-time highs, according to the data from Zedrun, and that's the case with launches as well. On the first day, it like soars up really high and then it drops down and tanks down to 75%. But you know what? That also means that you might find an opportunity to actually get into it after it's dropped and then use the stability from there and take advantage of some peaks in there. So when you actually farm the tokens, then you can then convert them when the timing is right. But many of the gains that users have made through the staking and providing liquidity have evaporated because, yeah, big deal, you get a lot of yield in these liquidity pools, but if the actual native token actually drops by far, then you're not making any money whatsoever. So what people want to do is they want to actually be paid out on the stable currency itself. So supplying stable coins to Curve or as a stablecoin liquidity pool as a USDC and a USDT pair amounts to blockchain versions of savings account. Many of the top protocols, including 3 listed above, which I think are these ones here, Yearn Finance, Convex Finance, and StakeDAO, offer between 10 and 30% yields on average for stablecoin deposit. Now, this is huge, guys. This means without actually having any risk into the cryptocurrency market, you can deposit cash, your money that you have, into a stable cryptocurrency like USDC and USDT, which is just fiat currency, but in a cryptoized, if that's a word, form, so that you can then have these higher yields. Now, these yields are crazy yields because these yields are very comparable to the yields that would find after leverage on a property purchase, for example. And these are very stable and has longevity in terms of being able to produce these yields. So why would people then continue to deposit their cash into the banks? Well, not so much. The DeFi world has increased so fast, so quickly, so vastly as well. And it's really interesting to see how the world would then adopt this technology so that they get a better return for their buck instead of putting their money into banks that give them diddly score returns, which you and I also feel the pain of. Moving forward on other altcoin space, VV Economy is an app-based marketplace for premium licensed digital collectibles. With VV, users can obtain common, rare, or one-of-a-kind digital collectibles, customize and showcase them in the virtual showrooms, as well as buy, sell, or trade collectibles with other VV users, all from the palm of their hand. And look, they've got some fantastic NFTs that are actually coming onto the market. No, I am not sponsored to be making this video, but one of the biggest players of the art and creative space is coming onto economy, and that is Marvel releasing its first official NFT collectibles. And so look at this guy. Disney-owned Marvel Entertainment announced that this week they will be launching its first official NFTs via VV Digital Collectibles app later this year. You know, those are the guys that created Spider-Man, the Avengers, the X-Men. You guys get it, right? And so why is this such a big deal? As the NFT market blew up earlier this year, including more than 1.5 billion in trading volumes across the top marketplaces in Q1 2021, we saw unofficial artwork sales from popular comic artists such as Wonder Woman, sale from artist Jose Delbo that generated 1.85 million in March. So guys, NFT space is definitely not a space to be joking about. But Fox TV puts 100 million behind its NFT driven blockchain experiment, and we're going to have really exciting NFT projects like Rick and Morty come into the marketplace. And when these big organizations make their way into the NFT space, I think there is going to be some pretty crazy things happening in the NFT world. Speaking of NFT world, Zedrun is another fantastic platform, and when you go to their website, you can see these horses, which are actually NFTs that are literally racing on the platform. This is a live feed streaming at the moment of the horses that are racing, and look how exciting is that. And these horses all come with different traits, and they come with different genealogies, which then determine their performance. And also you can nurture and grow them as well by the tracks. And even there is going to be also developments into the virtual reality space, where then you're going to be able to visit your own horse, and you can trade these horses for money as well. And the winnings from the races can actually come into your pockets when you actually have your NFT horse win a particular race. And look at the design, look at the uptake, look at the participation. It is happening right now. And these are the spaces that you need to be paying attention to if you want to see the full effects of NFT space in the real world application. Very excited. Moving on, Solana is another cryptocurrency where everyone is super duper excited about. Solana has seen some impressive growth from Tuesday's crash, soaring by more than 18.31% since then. But a lot of coins have done that, but there's a lot of really exciting things about Solana as a project that probably warrants for a very bullish move from any kind of dips. So it is definitely in my strategy to buy off Solana every time there is a dip in the cryptocurrency market, like the one we have seen this week. Tokenized stocks for more than 50 public companies, including Facebook, Google, Netflix, Nvidia, PayPal, Square, Tesla, are currently available only on the cryptocurrency exchange FTX, which I think signed a deal with MLB as well, which is really exciting. However, they can also be transferred to both centralized and decentralized exchanges built on the Solana blockchain. It was designed to be an Ethereum killer as a proof of stake blockchain, which claims to be able to process 50,000 transactions per second at peak load, while Ethereum can just measly do between 10 and 15 transactions. So guys, scalability is the word of the season. Everybody wants to get on cryptocurrency, but if the technology itself cannot handle it, then we need these platforms where there's going to be upgrades. That's where Ethereum is heading at the moment as well. And there's going to be upgrades that are coming into place. Things like EIP 1559, as well as Ethereum, I think 2.0, which is going to happen early next year as well. So definitely a very exciting space to be in right now. If you guys haven't done so, make sure you go check out my channel and subscribe. You will see there is enormous value that will come out of my videos. I post multiple times daily so that you can stay updated and you can get out there and make some killer dosh with cryptocurrency. Thank you so much for tuning in. If you haven't done so, make sure you go like, subscribe, and ring that notification bell, and also follow all my other social channels so that you can stay updated and make some big dollars and create generational wealth like this humanity has never seen. Thank you so much for stopping by. Peace out.